and they end up paying a hell of a lot more for the frickin' house. So that's the finish to that line that I put in the title. Hold out for the rates to get lower, and you're going to end up paying more for the damn house. Period. Look backwards on what we experienced when rates were low. House prices were just jumping like crazy. Why were they jumping? Because you were basically paying less because you could buy that lower interest, get that lower interest rate. They thought you were paying less, but you're paying more for the freaking house. You're really not paying less. You're actually paying a lot more. Either way, you're still not getting what you were hoping to get. So, what you should be doing right now, in my opinion, you got to decide for yourself. You're the CEO of your real estate investment business. Is you need to be locking in the price of the home right now. And if the rates do go down and you're just a big freak for low rates, you absolutely have to have a low rate because somebody else does, and you can't end up having a comfortable life if your rate is low, then you refinance. Big damn deal. Warren Buffett himself, we've talked about it 100 times on here, says the 30-year fixed is the greatest financial instrument in history because it's a one-way bet. The rates go down, you just refi. If they don't, you protected yourself. Now, we anticipate them to keep going up. Now, right now, they're good. They've rebounded. They've gotten to a good spot. We're also in very, very low trading right now because traders, they leave on weeks like this. They're gone. Most of them, there's hardly any of them in on the floor getting anything done. We've got the CPI report showing that things are a little bit, has a little bit of an improvement for everything. We've got existing home sales, which are showing things are slowing down. They're actually kind of picking up a little bit from the major slowdown. So some, they believe, right? They believe that we might be potentially at a point where there might be a turn with respect to that. We also have, we see a New York Fed showing that credit is continuing to tighten because cost of money is getting so expensive. Consumers are trying to get their credit card limits upped. Why? Because they're trying to spend money. They're trying to drive the economy. They got caught up in this bull crap of wanting to buy all the time. There's this dopamine hit every time you click buy. And that has happened. It's a consumer-based economy. So now they need to expand their credit because they can't pay down what they had. There's issues all over the market. And because of that, we're starting to see a little bit of a reaction to the bonds that show things are getting a little bit worse because jobs are getting hurt. Let's just say everything in the economy is getting hurt. As a result of that, bonds start to do a little bit better. Now, are they doing? We're not seeing rates go like way down. People are like, oh, rates are down. Well, I saw the news that the rates are down. They're not freaking down, guys. They're very close, similar in interest rate, within an 8 to a quarter percent of where we were 2-3 weeks ago. So don't freaking think that you're going to hold out, then rates are going to get way better anytime soon. They're going to improve a bit. But look, we come out of that channel. We got above the ceiling of resistance. It was a really, really, really heavy ceiling, and we're heading marching right. I was saying before, marching right to that 200-day moving average. But as we get closer, I think we're going to bounce off of that, and we may end up working our way right back into the channel and keep working our way downward. The interest rates are not positioned to where they're going to get significantly better, in my opinion. I could be completely wrong, but let's think about this for a minute. We've had a lot of bond-friendly news over the last couple of weeks. Very, very, very bond-friendly news. That bond-friendly news should have just skyrocketed as compared to where we were with all the BS that we were getting for a long period of time. But it hasn't pushed us through these. It's so high that I think that it's going to push us away from this channel. Because in reality, the rates want to be up. They want to be higher. People who put their money into that particular instrument to get paid back, they want more than what they're getting because inflation is eroding the dollar so rapidly. Realize that. It's not a matter of the market. It's not a matter of the government. A lot of those things play a part, but it's a matter of people investing their capital and getting a return for the risk that they're putting up. So they're putting their money into these bond pools. They're getting a return on that investment in the form of the interest that you pay. It's not the full interest that you pay. You could pay 8.5% on an investment property. They're only going to get 6%. So there's a cost to all that. So 6% return on investment when inflation is as high as it is, who wants that? So understand that rates are climbing up because of the risk associated with where the money's with the money being lent out to somebody, right? And now we're credit crunches, and are people going to be able to make their payments? I don't know. There's a lot more risk to it than what we can see in the future. So anybody who's putting their money into those bond pools, mortgage-backed securities, if it isn't the government subsidizing it, they're going to want to get more money. So I think interest rates are going to want to continue to come up. Any opportunity you have right now to secure a good solid rate, at all in today's market, I'd grab it, because I think that if they do go down, let's think about the risk. If they do go down, costs are going to go up. If they go up and you waited, just getting a higher interest rate. So if you're on the fence, get the hell off the fence, pick a side, and let's just go. Have yourself an awesome Thanksgiving. I will see you guys on Monday, because tomorrow's Thursday. Should be spending time with family. You're not going to hear from me for the rest of the week. Thanks, guys.